Hi, good afternoon. Welcome to Finance Magnates' first ever live debate. We're in for some 40 minutes of pure adrenaline before we shut down the place, which is exactly what owners of new prop firms say. We wanted to do this for years, but the right topic didn't quite present itself. The global code of conduct, too much. Will metaquotes finally be beaten by metaquotes? Doesn't work. Enters prop trading. Or is it funded accounts? Is there anything proprietary about charging for challenges in a glorified demo environment? Or perhaps, is it a far more appealing proposition, one that, if done right, can bring in new traders and educate the existing client base? In other words, is prop trading good for the trading industry? Well, to debate this, I'd like to invite two instruments. One co-founded FXCM and was its first CEO. The other has been there for 24 years and is the current one. One is in the US, the other in London. They have different approaches, manners, styles, but they are two of the most distinguished executives in our space. And boy, do they have conflicting views about prop trading. Ladies and gentlemen, put your hands together and welcome Brandon Callan and Drew Niv. Please take your seat. Okay.
I have to say we have a lot to live up to after that introduction. Thank you, Jonathan.
So here how it works. We'll have 2 rounds of voting before and after the debate to see who way our audience. Let's put on the Slido image for you to vote. First, you can all go to slido.com and enter the code you see on the screen or just scan it. Once you do that, you can have your voice heard and vote. In the meantime, I will say that a survey that I posted on LinkedIn precisely with that question has generated 80% support for the agree vote versus 20 for the disagree, which means that Brendan will have to work much harder today. Okay, so far we're in landslide, but as often happens, it might be just one person. I'm trying to gauge if people vote, interact. Well, Drew, I think you're done. Okay, it's coming. You'd expect a tech-savvy industry to be a bit more.
Rigged elections are the best elections.
Yeah.
Yeah, it's fair to say there's a bias in the room. That's all right. I got my work cut out for me.
See, you're on 27%.
Is anyone still voting? Okay, I think we're fine. How many of you in the audience are involved in one way or another in prop trading? Okay, despite no hands raised, I think there's a lot of skin in the game, if one could judge by the results. Okay, so Brendan, you have a lot of work to do, but Drew will go out first. Let's hear Drew Niv starting the motion of why prop trading is good for the trading industry.
Thank you. I think obviously the reasons are obvious, and obviously preempting that. When we started in retail FX, 26 years ago, retail FX was immature, far from perfect, and if people were looking at the way FXCM ran in 1999, they'd be like, "What is that?" And I can tell you lots of ridiculous stories. But obviously, the firm and the industry has matured a lot, and I think this is where prop, obviously, is that 2000 period, of retail FX equivalent, right? And it's not mature. But if you look at what did retail FX do, right, in 1999, 2000, it expanded the marketplace of users, right, for trading by a lot. And this is, I think, for prop, is essentially the issue for our industry, is that prop came with invariably an unrealistically good value proposition for the client, but it's that value proposition for the client that has drawn an audience just in the last 3 years that far surpasses the audience in the retail FX industry in terms of numbers. And I think like from a sort of like the same as crypto brought a lot of people into trading, this is the same kind of thing. And I think that if you look at even at this very early stage with all of its issues and really serious issues, you're looking at a massive expansion of users, a massive expansion of numbers. And as we, grow and those models evolve, the questions will be how do we turn those users from this semi unsustainable thing the way it is now into a sustainable trend, right? That is going to be, help build brokers. And I think there's already starting to be examples of conversion rates from prop to brokerage are going up. There's definitely, and obviously each firm, fairly unique in how it presents itself. But I think this is something, and at ATFX, we clearly started, prop, not because we think the prop business is like going to be one of our biggest things ever. It's because everybody knows cost of acquisition is what all of us spend over half of our money on. Okay. And cost of acquisition is the biggest challenge of this industry. And this is a way to take cost of acquisition, to be way lower to a much, much higher, level. And I think it's something that if you look at prop the way it is today, is it ideal? No, not far from it. But from a cost of acquisition and from a, you know, user expansion, this is where I think the main crux of why this is good for the industry. And we are talking about same as retail effects. It's global, universally applicable, even in countries where we can't do, retail trading, right? This is universally applicable. So this is a great seeding ground, and it's a great educational ground, right, to get people trained on the technology in FX. And as much as we think the platforms are simple, our platforms are way more complicated, right, to a larger audience. And if you look at the retail FX CFD space, to all of us, it seems big. There's 2,000 brokers, it's all over the world, but you go up to 50,000 feet, and we are a tiny speck of the financial market, and there is hundreds of millions of users out there that we don't tap. And this is just like crypto. This is one way to kind of reach a much, much bigger audience and kind of bring them closer to, to our solution.
4 minutes sharp. Very well.
Okay.
Brendan,
Thank you, Jonathan. Thank you, Drew. There's an ad on YouTube from a company called Funded Next. And if I could play that ad for you now, I would make it my entire opening argument. Let me describe it to you quickly. There are 5 or 6 20-something-year-old guys. They are in front of 2 fancy-looking cars, and they are breakdancing and rapping about high funded rates and payout ratios. I kid you not. Okay, of course, this is not good for our industry. All right, by the way, if you pause the video at the right moment, you can see one of the cars they are breakdancing in front of is a Honda. No offense to Honda. But if you're going to pretend to be a baller, even the good people at Honda would suggest you try harder than that. Funded Next is not an outlier. Okay, this is the business model laid bare. It is all hype and no substance. Now, I mean this next sentence sincerely. If you send any of your hard-earned money into these buffoons, you are donating it to them. Don't do that. Okay, I want to back up for a moment because I take exception with these companies calling themselves prop firms. They are not. Okay, as a company, you are what your revenue is. So these companies, as bizarre as this is to say, these companies sell demo accounts. Prop shops was a viable business model. In 2008, the Volcker rule came out, which disallowed FDIC-insured banks from taking short-term, speculative, proprietary positions. And of that came the business model of prop shops. These are companies like DRW and Infinium and Tower Hill. They were mostly based out of Chicago. And yes, if you had a consistently profitable track record with good risk management, they would give you funding. You had to show up with your own 50 grand, but then they would top it up. Okay. The funding was the least valuable service they provided. They would get real-time data rights from the exchanges and split that cost among all the traders on the desk. They would co-locate and cross-connect at the same data centers of the exchanges for low latency execution. And most importantly, they would buy seats on these exchanges so that their traders would benefit from the member rate card instead of having to pay non-member fees. That was by far the most valuable service they provided. There are two reasons these firms mostly don't exist anymore. One is because quant trading has become what it's become, and two is because retail brokers like us provide that list of services I mentioned for free. I will say it again, for free. We pay the exorbitant costs of the real-time data rights from the exchanges. We cross-connect and co-locate for low latency execution. We allow leverage, which is the same as topping up your equity, and we charge less in fees and commissions than the rate card for clearing members of the CME. Moving on. I want to talk next about inevitability. There are companies in this ecosystem of funded account firms that for a fee guarantee they will pass your challenge for you. Okay, you of course cannot guarantee 10% return, so let me quickly talk you through the 4 challenge arbitrage. You buy 2 challenges at company A, you go long in one and short in the other. You buy 2 challenges at company B, you go long in one and short in the other. You leverage these accounts highly, but just below the point where they will get margin called out. That is the only decision that requires any level of competence. Okay, in the end, you will have 2 winners and 2 losers. With the 2 winners, you go long in one and short in the other. Again, you leverage them as highly as you can, but just below the point where they will get margin called out. In the end, you will have 1 winner and 1 loser. If 90% of the profits on the one winning account come to more than the cost of the 4 challenges, Bob's your uncle. You rinse and repeat. Okay, my 7-year-old could figure out the 4 challenge arbitrage. So of course, many people have. And there are now other firms in this ecosystem of funded traders, trading, whatever it's called, that share common email and IP addresses among the prop firms. And the prop firms are using this information to deny profit share payments. They're using other information. You made too much of your profits on one single day. You made too much of your profits too close to news events. You breached intraday leverage restrictions or overnight leverage restrictions, any slew of reasons they can come up with to deny profit share payments. My point is, this was always going to devolve into a cesspool of cat and mouse gamesmanship, which is what it mostly has become. So no, again, this is not good for our industry.
Thank you for that. I won't be surprised if we see a spike in prop trading in London after this sound advice. And now each of you will have about 5 minutes to reply, to comment on what we've just heard from your fellow debater. Drew, would you like to start?
Yeah, I think, again, go back to the beginning. I can tell you when we started FXCM in 1999, there was 400 boiler rooms in the United States calling clients to do FX. Some are owned by the triads. Some are owned by the Genovese crime family. Okay. Some are, were owned by just, whatever. It took a while, right, until the industry became regulated and mature and real, right? And it was like an online, right? And, we were one of the first people to do this online. And I think this is one of those things but today is a far different industry, right? And I think this is something that everything got to start. And of course, most prop firms are doing it wrong, right? The value proposition is unrealistically good, and because it's unrealistically good, it's attracting people to essentially do that. But just like in retail FX early days, the curiosity attracted lots of people. People learned, and then stuff became much more sophisticated, much more straight and narrow. And I think this is something that us as an industry, you're going to start to see as prop firms, the old model, because of what Brennan said, right? As the old models die, different models will come, right? And there's already been an the models are evolving, less leverage, stricter rules. And so you have to look at it over the next few years, right? It will become more selective, more sophisticated, right? But every financial instrument started this way, and it all started as a Wild West, right? And, I think it's something that, is very, very important, to take, away from this. Why it's good for us? Not because it's primarily, you know, the world's best proposition today because it is mathematically unrealistically good and therefore even I would say dishonest. Okay. Yet the amount of traffic, the amount of interest this has generated, and not all of that interest is genuine, and some of it is just gamesmanship, but there is enough of it. Okay. And I've seen enough of it, you know, with prop firms that the convergence to from that to real trading is definitely happening, right? And that convergence is growing. That convergence 2 years ago was not even 2% from prop leads to be accounts, okay? And I can tell you our experience is now north of 10%, okay? And that is, you know, obviously the rules have to grow, the rules have to change, but I think that as those, you know, as we grow those models, we definitely are gonna see, you know, an industry that's gonna evolve into something better. And I will. My last thing is, everybody also understands that of the whatever 2,000 firms in this industry, okay, if we did a survey, 98% of all the trades done in this industry may as well be demo trades, right? Because they never hit the real market either, right? And I think that a little bit duplicitous of us to go judge other people for trading demo when we are mostly B-book, right? As an industry. And I think it's something that, do we do it better? Do we do it in a much fairer way and in a less misleading? Of course, right? But that took 20 years to get there. And prop will also take some time to get there. But as a value proposition, okay, it is unbeatable because the math of limited downside of I risk $300 and I could make $10,000. If you looked at actual amount of winners that are out there, I would not be, um, you know, like it would not be unfair to say the amount of large winners in prop is probably equivalent to the amount of large winners in brokerage, right? And I think this is something that, okay, is that money that they're winning? That's not, there nobody hedged that money, so that's coming out of the firm's pocket, and some of these firms are going out of business because they're paying too much. But at the end of the day, right, there is a policing, you know, of this thing by virtue of the fact that if you're too unrealistically good, you go out of business one way or the other, right? And so the industry will, as it matures, right, will weave itself ever closer to the brokerage industry. And I think it'll be a huge mistake for people because in terms of to nullify this as an industry and you dismiss it as unrealistic, even though it is mathematically unrealistic today, it is not going to be there forever, right? And I think it's one of those things that it is edging
We are
closer
done
to
in
reality.
10 seconds. Okay, so we've taken the long view, both historically, both of you, with different conclusions. Brendan, how do you see it?
Yeah, this is not a nascent version of CFD trading from 2 decades ago. These aren't even apples and oranges. These are on different planets as far as what they actually are. CFD trading is trading the financial markets with the use of leverage. It is a high-risk product. We have appropriateness assessments in our onboarding journeys. This funded account thing or these challenges are, there's some convoluted option that people buy on whether or not they're going to be able to game a certain set of rules such that they hit some arbitrary target without breaching nonsensical restrictions that are in place to prevent them from hitting that target. I no idea what you call that, but it is not the same as trading the financial markets. It is not educational. Okay, anyone from the school of nothing to lose is not getting a proper education in risk management when it comes to real trading. Okay, that's what the school they're going through is. The challenge period, they've bought the challenge, they have nothing else to lose. So if they're up 3% halfway through the month, first of all, if you're up 3%, you're killing it that month, absolutely killing it. But it means nothing in this context of the challenge. 4% means nothing. 9% means nothing. They have to get to 10% or they lost their time and their money, frankly. So instead of making proper risk management decisions and using trailing stops, et cetera, they're doubling and tripling down to try to get to the 10% number. Same thing in the funded account phase. They have no downside. So it means nothing to them to double, triple up because there's only upside to this. This is not educational. Okay, he mentioned the math as far as who is profitable on each side of the fence, the CFD side of the fence or the prop trading side of the fence. ESMA requires us to put that at the top of our website. Okay, 1/3 of our customers end a year with more than they started, 2/3 end with less than they started. We have to disclose, this is on all of our advertisements, it's a regulatory requirement. Okay, this is going to come out in the wash, and I think the lawsuits will help bring it there. But what is the percentage of people that pass the challenge? What is the smaller percentage of people that trade a funded account profitably? What is the yet smaller percentage of people that get paid the profit share that they're due? And what is yet again the smaller percentage of people that pass the challenge, trade a funded account profitably, get paid the profit share that they're due, and that amount comes to more than the cost of all of the challenges they had to buy to get to that point? That number, I bet my house, is less than 1%. And when that becomes public knowledge, the demand for these challenges dries up and goes away, and these buffoons breakdancing in front of their Honda dry up and go away, and that would be good for our industry. One more thing. On regulation, it is my understanding that most of the people in this space are hanging their hat on the fact that this is not a regulated activity because it doesn't involve client money. Taking safe custody of client money is not the only regulated activity that we do. The reception and transmission of orders is a regulated activity. And these funded accounts are retail traders placing buy and sell orders on financial instruments. And if that order profits, they are rightfully expecting 90% of that profit to be sent to their bank account. If that is not the reception and transmission of orders, I don't know what is. Nowhere in the rules does it say it's only so if it results in a loss-making trade. I think the regulators will soon come around to that realization and declare this a regulated activity. And when that is the case, all of the ads have to be fair, clear, and not misleading. And when that is the case, I think this all goes away. And again, that would be good for our industry.
Spot on. Okay, we have time to field some questions. Do we have any questions? These are part of the debate. You're most welcome to tackle, embarrass, or support speakers. Are there any questions to be made? Victor, you have to wait for a minute. Any other questions? No. Okay. You can take it. He's an implant from the production. That's why we.
All right. So I remember starting as a retail trader back around 2003, and it was quite difficult to get payouts at times. And I imagine that it's way more difficult for the prop firms. So how would you, Drew, how would you comment on the elephant in the room? Like how do you actually, you don't have any legal way to chase your profits.
I agree. And I think that, again, the way I view it is in the age of social media, if you think about when I started FXCM, if you did not have a US, UK, or one of those really big country licenses, you're not getting anybody's deposit because of what you said. But today, all the biggest brokers, the most successful brokers, are based in some volcanic island, right, that has no people in it, right? And because they have 500,000 customers, really good spreads, and 500,000 people that have voted on the internet that they get the deposits done instantaneously, their withdrawals done instantaneously, and all is good, right? The IC markets of the world, all like you can name 50 firms, right? And prop is no different. Prop, because it's been an avalanche of traffic, because the internet has said users, not false advertising, not to say that there isn't, but users have been paid out. That's why the trend has gone so much. Users have been paid out a lot of money. This I know firsthand. Okay, now, does everybody, has it gone down as people have gotten smarter about arbing and all that stuff? Has there been more issues? A lot more issues. The trend only became big because the payouts were there. Essentially, the people that blow up for two reasons: either because they paid out too much, okay, or they stopped paying and the internet voted them down, right? And people stopped putting challenges. There is that, capitalism has its own, fixing mechanism for this, right? And I think that's a really important, part of it. The payouts have been there, otherwise it would not have been this traffic.
Okay.
The invisible hand could assist. Brendan,
Can I address
what's your take? Sure.
I want to look this up because I wrote the quote down. I almost fell out of my chair reading it. The funded trader, okay, they have openly acknowledged they're behind by 1,300 people in profit payments, some more than a year. He's got a quote. This is a written quote. So it says, "Here's how we see it: more revenues equals more payouts equals more testimonials equals more profit for TFT, more funds to pay back owed payouts and accounts, leads to reputation restored." He's acknowledging this is a Ponzi scheme. He's saying himself, I need to sell more challenges so I can pay the overdue payouts that I'm past due. Like it's in. I feel like I'm in the upside down world somewhere. Did we forget what a scammer looks like? I'll give you a hint. It's the guy rapping on YouTube about the get rich quick scheme
With a Honda.
Snake oil.
Okay, any more questions from the audience? Yes, Joe, let's.
Thank you.
Hi, Joe.
Hey, how are you? Let's put it this way. From a simple perspective, for a client, come as a lead. Either from a broker perspective, they play demo, or from prop perspective, they play $20, $30 for a same demo challenge. Forget about like how much return or like 2,000, 5,000, 10 grand if they win. Forget about that. When I was in this industry, we always ask people to play demo. Yeah, people really, a lot of them, they don't really play seriously. They just hold the position, they forget it. 1 week after, they make 20 grand. They thought they're good, and then they open it real demo, real account. But I think from a client's perspective, people will play more seriously if they pay even little money for a demo.
More seriously, they're what? Sorry.
They will for the client, potential client, they will play more seriously if they pay $10, $20 for the challenge, right? I assume. And of course, all these rules, all these requirement is to prevent that they trade on the news, they got huge slippage here and there. That's what really, as a broker or from our perspective, what a good trader should do. Avoid the news, over leverage, like all not trade, over trade in one trade. You know, all these rules, principally for the prop, we need to find out those good traders. There's a principle, of course. You mentioned a lot, like other broker or other small firm, they exaggerate 100 times. This is different people's practice. Is that like really unregulated activity? People will not play seriously. And this for ATFX, no, because we care about our reputation. All our clients, if they really follow the rules, they got 100% payout fairly quickly. You know, so of course, like Joe mentioned, same with our broker industry. If people play long term, care about their reputation, they should really follow the rules and pay. Even the term is too good, you have to admit it, and then you can change.
Joe, we love you, but is there a question coming?
Yeah. So my question is, do you agree, from a client's perspective or potential client perspective, people will treat prop challenge stage more serious than demo? And if that's the case, it will help the client really understand how they should be traded before they get into a real account stage, funded account stage. I think that's kind of thing is good for audience or potential client that understand how the market really works.
Instead of buying the challenge, I don't know what the average price of these things is. 150.
More than $10.
So it could be 20, it could be 50, it could
So
be
open
10.
a live account. The brokers all have decimalization. You can trade in like micro lot basis. Open a live account and experience real trading. The gamesmanship of the funded accounts and the challenges is absurd. I mean, I kind of talked through it already. And the crux of it is if you actually get good at it, they'll change the rules or just disallow you from playing again.
Depends on broker, to be honest, right?
So
Okay.
the reputable brokers that are entering the space are not to one of the comments you made, are not going to attract the naive audience that this product was built for.
Yeah.
They're going to attract the sophisticated ones that have taken my simple 4-challenge arbitrage to the 10th degree, and they're doing it with online conglomerates of people. I went down a rabbit hole with this, for a little bit. Like, it's gotten very sophisticated.
Yeah, but also people are now testing their EAs in accounts, and it's an incentive issue, right? You open a decimalized account, and you say, "Oh, wasting my time making $3 on my EA. If my EA can go and win this challenge, then I know I can put it on live money. Why lose 10 grand if the EA sucks? Or I can lose $300 or $200. And so it's now becoming the new demo. It is the new proving ground.
I think we have to
We'll
look it on
all-
the more like full spectrum wise.
Yeah.
Don't just focus only on the prop. If they get a good broker, if they're good, for example, we got followed copy trading. They can be the signal provider. They can generate more revenue from the broker side. Then
I get it.
the money that we pay, yeah, we could be losing on the prop side. Doesn't matter because it's a small, relatively small amount of money.
I went through
We'll
the
have to
business
take two
model.
more rapid fire questions. So unless you have a rapid fire answer for this,
Just to say that if you have a profitable trading strategy, capital is not your problem. You will build the capital you need,
But
or you
have to
can
test
raise it within
right?
your
You
network.
have to build your confidence in the prop stage.
Okay.
okay, so we have here Aiden and Itai for two rapid fire one sentence questions because we have a voting to do. Aiden here and then Itai.
Hi, Brendan.
Hey.
Actually, I thought your analogy about the traditional prop trading was quite valid. What I don't understand as a prop trader, they're trading against the house. Like, this doesn't logically flow because, unlike when you're trading on exchange models, here you're trading against the house. So, like, I'm not a fan of prop trading.
Which has never been done in the industry.
That doesn't make sense. It's like I'm allowing
totally-
someone to beat myself. Can someone reconcile that for me?
You're trading in retail effects against the house too. Okay, so
okay.
that's the same thing.
The difference is we're regulated. I have a best execution obligation. Nothing of what our customers see as far as prices has been at all affected by our position as a company or where their orders are. These prop firms aren't regulated. They can show the longs a lower price than the shorts. They can stop hunt. They can skew. They can widen prices out as much as they want. They have all of the cards in their hand. I have a regulator. We're beholden to. We have to follow best ex and consumer duty rules.
And the users voted. The regulated firms are shrinking. All the unregulated firms are growing. Why? Because the unregulated firms have a better trading experience. Okay, because they have less regulations. It is the same thing. Is the industry going to mature? Sure. Right? There's lots of flaws. Concede the fact there's lots of flaws. But it is regulation is not the thing that has made trading experience any better for anyone. And I think that that's something where competition has, right? And I think that that's something that's really important. And as competition winnows out all the losers, if you will, the people who are doing a bad job in prop trading, the winners will emerge, and it will be a different ball field.
Okay, last question for now. Yes.
Thank you, first of all, for your perspectives. I think you spoke very well, both of you. I'd like to provide another perspective and maybe get your quick take on it. I like to play poker. I've played in casinos, I've played in home games with friends, and I can also play on Facebook without money. The Facebook without money analogy is me like opening a demo trading on TradingView. The home game analogy is like the prop trading. I can come play with little money. It's still got some spice, some excitement. And of course, I can go to the casino. I've also been in private clubs to play bigger money in that. I think in that sense, today, home games are my favorite place to play. I can go to the casino, but I'd rather have the home games. What do you guys think about that analogy and looking at prop trading that way? As long as prop trading firms say what they are and don't say what they don't are, why not have this entertaining, educational place for home game poker players or traders?
Well, I think that's exactly what happened. If you look at internet traffic as the voter of, what people have voted for, is that traffic and user base of prop is higher than our industry because most people want to play at home and not at the casino with too much money. And I
Brendan?
think that's the same thing.
Yeah, that doesn't make it a good thing. I don't know how to draw the analogy with online poker. I don't, like I said earlier, I do not see challenges and funded accounts as real trading. You're buying this weird option on whether or not you're going to gamify a system in a very awkward way, and if you do, they'll change the rules or disallow you from playing again. I don't think it's at all the same thing. Don't spend $100 on a challenge. Open an account with $100 and learn to trade the real markets with a regulated firm where can't stop hunt, can't skew, can't push the position up if you're short and vice versa. Regulation is a valuable part of the financial services system. Okay, it does add value to the end client, massively so.
I saw there's one unavoidable question from Wei, so let's have one last question and call it a day and go to vote. We need to
Hi.
decide.
Yeah, thank you, thank you.
How many ATFX questions are allowed?
Yeah, I'm from ATFX, but I'm not asking. I don't have an agenda for marketing, but quite interesting for this topic. I want to ask both of you to answer, if you can. If you want somebody else in this room to trade your own money,
To trade my money.
your money, right? Your money, Drew as well, randomly, right? People can sign up, and you want to pay 50% of that. How much you want this guy to pay you from beginning to start with?
I missed the last part. So if I was going to have someone trade my money
Yeah,
and I knew I was going to share the profit 50-50 with them,
Yeah.
I missed the rest of it.
yeah. And then how much? Because normally you have to pay money for the campaign for the to start with, right?
Okay.
How much you will charge them to sign up this? You want to do the free? You want to say, okay, anybody want to take this challenge? I charge you $5 or $10. You want to give the free or you want to charge some money? You need people to treat your own money. You want to pay 50% of that from this audience.
Yeah, I'm still not sure I got the question right. But I can go to the math, right? Again, 1/3 of CFD traders end a year up. We don't know the math yet for the funded account options. Again, I think lawsuits will bring that to the public sphere pretty shortly here. But it is not 1/3. So if the question is, where would I park my money? With a guy punting around in challenge land or with someone trading CFDs, it's definitely the latter. If I was going to share 50-50, all of it, what I think was part of the question. CFDs, for sure.
Drew, any words of wisdom to wrap up?
If you look in mature land, right, we say the longer the tracker you have, the better. But if you look for a person that, hey, I'm just starting, so a real proprietary trading firm like you were describing, right, early on, said, okay, you have promise, we'll give you a little bit of money, we'll see how you keep doing, and the better you do, we'll give you more money. Theoretically, it's the same thing. Do we currently have any of these challenge firms that are serious, like funders of like serious long-term traders? No. But if you looked in the year 2000 and you looked at all the retail FX brokers, you look at any of these Mickey Mouse dinky things are going to live for more than a year or two? No. I didn't think so. And I would, and the facts are, right, that they did, right? And we took the company public. It had 500 million in revenues, et cetera, et cetera, et cetera, right? And there's lots of firms that are much bigger, right? And I think that that's something, this industry is the same thing, right? It's an immature stage. I wouldn't trust my money to any of the challenge winners now either, because the rules are not sufficient, right? But that does not mean it does not add value to our industry, right? It adds lots of value for all the other reasons mentioned, and one day we'll get to the point where it'll be real proprietary trading.
Brilliant stuff. Let's have a look at the first round of the votes. Can we see what has been done just 40 minutes beforehand? We're looking at the first round. We were at 67 pre-debate. Okay. Yes, 71% has agreed with the motion, whereas 29% have disagreed. And now let's vote again. Let's open the Slido for a revote to see how Brendan landed, how Drew made his case. No, guys, please, let's go to the post-debate. We don't add up. It's not a prop firm. Let's go to the post-debate. Please, everyone, vote. Have your say. This is what we're here to do. Let's decide who takes home this baby. Close call.
Oh, disagrees on top.
Yeah, this is Al Gore versus George Bush all over again.
Hanging chest.
Are we still voting? Do we have content farms in far-flung places doing the voting for us? What can I say? Okay, we'll give 2 more minutes and we'll wrap it up. If anyone hasn't completed their voting, that would be the time. We started with the pre-debate of is prop trading good for the trading industry? The percentage was something like 70 to 30. After hearing Brendan making the case, after hearing Drew talking about the value for the industry, you have decided again that prop trading is not good for the industry. Ladies and gentlemen, put your hands together for Drew and Brendan. But
And Jonathan for putting this together. It was fun.
just a minute before you walk away. Since you both fought hard, I have something for number 2 here. Here's a hoodie. I will read. I passed the FMLS prop debating challenge, and the only payout I got is this hoodie. Thank you very much. Please don't go too far because soon enough we will start the awards ceremony. So have a drink, have a blast, and see you here in a couple of minutes for the Finance Magnates London Summit 2025 awards ceremony. Thank you.